What's up? Welcome to the Technical Players Club. I'm going to make this quick. This is going to be a rough draft for some future educational videos I'll be doing, but I just want to get into the groove. So we'll do it like this. As you can see, this is a chart, a price chart. I'm not going to start from the beginning of how you learn everything concerning a price chart, but if you are a self-starter, you will have enough here to do a lot with, you know? So let's get right into it. As you see, how I like to keep my chart, I keep a little reminder up here: discipline, logical, systematic. I like to keep these two Frank Herbert quotes on here. I must not fear. Fear is a mind killer. Fear is a little death that brings total obliteration. I will face my fear. Seek freedom and become captive of your desires. Seek discipline and find your liberty. So let's get right into it. This right here is basically my whole strategy condensed into a quick checklist. So we'll go across this and I'll give some examples and maybe I'll expound upon it a bit. So first check we need on this checklist, I wait for the sequence. What do we need? A liquidity sweep. What is liquidity? Liquidity is where orders are sitting. You feel me? And in order for banks to place their orders, they can't get in like a retail trader can get in. They need to get in at specific price points or whatever. You feel me? So, and they also need to use that liquidity as fuel to move price. So, where will liquidity be sitting? Liquidity will be sitting where people's stop losses will be sitting. What is stop loss? Just an automatic cutoff of your position to stop the bleeding if it goes against you. All right? So, just looking at this and not knowing anything, just looking at this, if you were here taking short positions, right? Because I'm not sure if you can see my cursor, so I'll do things like this. If you were here, that area, taking short, looking for a short position, and you got in short somewhere around here, where would you think you place your stop loss, knowing nothing, right? Right above here, the highest price, the highest area your price went, right there. So that's the most obvious. All right, and this is a 4 hour chart. This is gold. Gold is pretty parabolic, so maybe I should use another one as a first example. Hold on, let's do NQ as a first example. All right, and we don't need to know about these indicators. You don't need to know anything about that because it's not really necessary, but it can be incorporated into your style. So yeah, we'll hide these indicators. All right, so looking at this, let's make it simple. So liquidity is going to be sitting at the ends of structure, basically. You feel me? So where would you think liquidity would be? It'd be there at a swing, probably be there at a swing, probably be there at a swing. You feel me? Gaps also hold liquidity, but that's internal liquidity. We're not talking about that right now. Maybe I'll get into that on another one. You feel me? So let's just say, yeah, we got liquidity. This is pretty much showing it itself. Let me just do it like this. Let me just do it like this. Boom. And this is like you can see price developing right now. So this is what's going on right now, and this is what just happened, relatively just. You feel me? So for example, since you can see it right here, what do we have? Boom. So there's been some liquidity sitting there, right? What does price do? Without knowing anything, what does price do? Price comes down, seeks that liquidity, and once it gets that liquidity, it gets some power to move in the opposite direction. You feel me? And I'm not saying this is a position that you should or should not take. I'm saying just as an example. You feel me? Because what time is that? This is 6 a.m. Wait, I'm on the 4 hour chart. All right, I'm on the 4 hour chart. So basically, the 4 hour chart is going to show your levels. So let's do it like this. Let's do it like this. You know what? Let me look. You know what? Let me do it. Let me do it like this. Let's go into replay mode. Let's go to, let's select a random date. Let's go to Tuesday the 9th, and we'll go to 9 a.m. All right. Yeah, let's do 9 a.m. right before open. So boom. So you want to be here earlier, but say you come here 9 a.m. at the open. What do you see? You see prices here. If let me just make this visual. This is a high, most recent highest point, lowest point. So I would say price is trading within that range. We're up in the premium zone. You feel me? Price at a premium. So just follow me. All right. So boom. Remember, we're looking at liquidity. So let's go ahead and just do this. And let me see, what time is it? 2 p.m. here. 2 p.m. here. So let's just do this. Let's just do the obvious. No, let's not even get too fancy. Boom. That's some obvious liquidity. I would say, no, that's already been interacted with. We don't need that. Already interacted with. Actually, not really. It came close, but didn't get that right there. So we have that. We have that. We have that. And this is a 4 hour, remember. We drop down to the 1 hour. And what are we working with? We come down to the 1 hour. And this is what we see, right? Anything to really take note of? Nah. Now, if I'm sitting here and market's about to open, what do I think the banks want to do to people? Because before market opened, you see we got these rises right here. It didn't quite take that liquidity. I think it wants to get these people's money and make them have a bad day. You know? That's what I think it wants to do. So we're not gonna get into this too much, but I want to do this because maybe it'll get this reaction and we'll see what's going on. So this is also an imbalance. My bad. Let's see if we can get it right here. Now look at this on the 4 hour chart. This is also a 4 hour imbalance, also known as a FVG. You feel me? Also known as a FVG. So we go there, mark that as a 4 hour FVG. Boom. Now, let me drop back down to the 1 hour. Now, in my story, and price has been trending up. Price has been trending up. It was previously trending down. Now we're getting to structure a bit. You feel me? We have let's go from here. We have high, low. Let me use the other tool. My bad. Let me use the path tool. We have high, low, lower high, lower low, lower high, lower low. This came up. You would think this is faking people out, but it did not break this structure right here. So we still got a basically kind of equal, but lower high. And let me do this. Within this lower high, you can see boom for those who like patterns, but we're not trading these. But just so you can see it, there's a head and shoulders in there. And where's the head and shoulders coming off? Right off of this fair value gap. You feel me? Taking that liquidity right here. Boom. Tap the fair value gap at the same time. Gave us 3 taps. Some will call this a head and shoulders. And then boom. Price seeks. Price goes down. and seeks this liquidity right here. You feel me? So we have lower low, lower high, lower low. That's still lower high, lower low. Now we're getting the what they call market structure shift. You feel me? Boom. Now we got a high, higher low, higher high, higher low, higher high. You can count the microstructure too. You can go higher high, higher low, higher high. Now, when you get this higher high right here, you're getting what we would call a breaking structure. This low is here, right? Taken by this level right here. All right, making lower lows. Boom, making lower lows. If you're making lower lows and higher lows, the higher low should be a strong high. If price breaks that high, that means that trend is no longer being respected. So what do we have here? Boom. This was the last higher low, right? That's where this breaking structure came from. This is the last higher low. That's where this breaking structure, this, let me get visual with it. Boom. It took that liquidity, broke this structure. That is a BOS. Breaking structure right there. Boom. That breaking, we need to know where the move originated. That's important. It originated from right here. That took that. So once price comes up, we're getting a market structure shift here, lower low. So we're getting higher lows. Now we're getting higher lows, higher highs. As it pushes up, when it breaks this structure right here, we have another breaking structure, also known as some people call this a change of, how do you choke or whatever. It's a changing character, change of character. I don't know how they write it, but this is a breaking structure, right? Boom. So what do we get? Remember, that move originated from here. It broke this here. This is a strong high. It should not be disrespected. Boom. It gets broken. Let's zoom in. It gets broken. Price closes above this level right here. What does it do? After it breaks, consolidates a bit, and then pops up, claims the level. Let me get right here. But this is like a small market structure lesson. You need to dive deeper into this yourself. You need to dive deeper into this yourself to have a full understanding. But I think you understand what trends are and what a market structure shift is a bit, right? So now we're there. You understand liquidity. The second step is we need strong displacement. Let me explain displacement too while we're right here. All right. Here's an example of displacement. I just saw the breaking structure, but I wouldn't call that displacement. Strong displacement is this. Let's just do a little. So let's do this. See how price came up? Higher high, boom, higher low. Higher high, this is a strong low now. This low should not be broken. Higher high, you call this a higher low. Higher high. Now, look at this. This makes a higher high, pulls back. We gotta really in there to understand this. Let me get the path tool. We go from here, we get a higher high, higher low, lower high, lower low. That is a market structure shift. Is it fully confirmed? No. Because, like I said, this is an imbalance, and we'll talk about this another time. But as you can see, this large candle, which is placed back under this structure right here. Let me get this tool, the brush. You see this strong displacement through this structure right here. Boom. That's a strong displacement. You feel me? So what did it do? This liquidity was built up right here. This liquidity is built up right here. It came and got that liquidity. You see how price was kind of trading in this range. It came up and got that liquidity right here. Let's see what time it is. Look, 9 a.m. This is like a previous day, 9 a.m. Then we get 10 a.m. So 9 to 9:30 market open, and that's the type of do you see how? I don't want to get too deep in this one, but do you pause? Do you see how the market shows its hand? It shows its hand with that volume. Retail traders cannot make that volume. That volume created an imbalance or fair value gap, whatever you want to call it. Boom. Look how that created that gap. And you extend this gap. This price doesn't exist yet. It trades up into the gap. 50% of the gap. Look at this. It trades up into 50% of the gap, perfectly tapping the 50%. Gives you your pullback. High or low still. This is equal. But the body of the candle closed higher. So I'm gonna call this is a higher high. Boom. Pull back. That's like kind of even, but it's still above the body of this. So I'm gonna call that a higher low. You feel me? This is a shift within this already. But I don't want to get too deep with it, but we can take this as an entry confirmation right here. Like short position, when it traded up into here and it did this, if you're aggressive, you can go right there. Me, I don't want to go right there. I want a confirmation even though you don't need one. And what will my second confirmation be? There's this inefficiency that was created when the price traded up into the gap. And look, when it comes back down, we went from this, from low, that's higher low, higher high, higher low, higher high, higher low, lower high. This is how, I don't want to get too far into this, but this is structure right here. Lower high, lower low. The trend has been established here and established here, close the inefficiency right here. So what we want to do, we could hit it for a short position. Let's say you didn't get until right here. That is at, what this becomes, 4 a.m., which is not ideal, but I'm just showing you this is the example of market structure. You place your stop above here, above that last structure that was made. That is a strong high. It should not be disrespected. And you go for a mechanical. This is to keep it simple because you could trade structure to structure. We used to go for a mechanical 1 to 2. You get that easy. But look at this. You get that mechanical 1 to 2 easy. But in all reality, liquidity takes liquidity and then seeks liquidity. And what do we have here? That's liquidity. That's a swing. You know people have their stops placed right there. So once it shifts here, you can say it wants to seek this liquidity here. So in all reality, you should be going for like that position and holding it with confidence. I must not fear. Fear is a mind killer. Fear is a little death that brings total obliteration. I will face my fear. And this becomes a, what is this? What is this now? This is a 1 to 5, a 1 to 5.46. And these are the moves that you need to catch to change your life in a short amount of time, you know? And this doesn't come from aggressively trading. This comes from letting the money come to you. You let it come to you. Now, if you've been paying attention to what I'm saying, you should be looking at the chart like, oh, he says this is liquidity. Oh, so that's where some liquidity would be. Well, what happens there, right? It seeks this liquidity. It seeks it, gets some power, aggressive move up, and look at that. Once again, and there was a trader. His name is Roy something. I can't remember right now, but I would give him a shout out. He made the argument that all trades are just head and shoulders. All good trades are just head and shoulders. And I don't trade patterns, but as you can see, you have a shoulder, head, shoulder, dump, right? As you can see, you have a shoulder, head, shoulder, dump, seeking this liquidity. Boom. That's a play. Those are plays. These are plays. You feel me? Now, so you understand displacement a bit. You understand displacement. Like when it takes the level, when it changes, I need to see the bank show their hand. Boom. Displacement. Big candle through the level. You feel me? Now, market structure shifts. I've explained that a couple times. Like you can see, boom, boom. It goes from market structure shifts. It goes from making higher highs to it goes from making higher highs and higher lows to lower highs and lower lows, or the inverse of that. So that would give you a market structure shift. As I don't know how else can I explain this. I will I will be tagging on some courses that are more detailed than I care to go into. If I'm going to make a course like some of the courses that I watched and studied, I'm going to get paid for that. But I'm doing this for free. I intend to do this for free, and I think I can do it in a way where maybe someone who doesn't understand the other stuff can understand what I'm saying. You feel me? Now, just observing these charts, you can see what I've been mentioning. This liquidity seeks this liquidity. You get a pullback. Boom, boom, boom. You get a market structure shift again. You get a continuation of the move. Here's something interesting to note also. The market tends to move in twos. So you can go boom, boom. That's one leg. Trend down, trend break, trend continuation. That's what the market tends to do. So you can sometimes do this. And you can know how much move you can expect out of the move. You feel me? All right, so what do we want to get into next? So you understand market structure shifts. Let's get into pullback forms. Pullback forms. That's the next in the checklist. Now this is kind of how do I do. Let me do a live example. Let me do a quote unquote live example in the replay. All right. So boom, I have some levels marked out. Who knows if this is like I chose a random day, so who knows if this is optimal. Here's what we need to look into when we come to the charts. Let's do this. Let's do this. So I just want you to understand what liquidity is, what this and that is. So let's do this. See, you got to be systematic with your shit, but once you've done it for a while, you can just see it. All right. So I'll leave this up here. We have obvious, and I'll mark it with I won't use any. We're not getting into session levels. We're just doing liquidity right now. But this is most likely a session level. But that's clear liquidity. Little flying here. But that's obvious liquidity. You feel me? This is where price is. This is where price is. So let's say right here, that was obvious liquidity. That happened at previous. This happened previous day. Where are we right now? 9 a.m., 10 a.m. This happened previous day at 9 a.m. It took this level, right? This is a 1 hour chart. So I just take note of that. Something I want to also take note of. This is not actually in my trading style, but let me not say that. It is in my trading style because my trading style is like a combination of smart money concepts, ICT concepts, and Stacy Burke trading strategy. So as you can see, the market shifted here and it pumped and it's coiling now, right? Stacy Burke says the market only does three things: pump, coil, dump, or dump, coil, pump. Maybe I'm missing. Maybe I'm missing something because this is not his system. This is my system. So, boom. So I'll have something like that, right? I'll drop down to the 15-minute and see what we're working with. So we get to the 15-minute, and what do we see? We see price was doing its thing. It was my bad if I sounded shitty. I was like talking, like covering my mouth, like I wasn't trying to have the microphone hear me. You see, price is doing this thing, right? Boom, low. That's a higher low, higher high, higher low. Now look at this. Lower high, lower high. We get this higher low. So it's kind of choppy. We don't know what's going on. And then here at 9:30 the previous day, it takes this liquidity right here. That's why you really don't trade open. But this is just data that we have. So we can say on a macro scale, liquidity has already been taken, right? Right? So if I'm doing a long-term play, let's just see. Because this is not exactly my way of trading, but this, I'm just showing you how structure works. So let's just say if I came to the chart right now, it's 9:30. I see this happen right here at exactly, it's 8:45. It's 8:45, right? I'm seeing this happen. I'm thinking, price did, this is obvious. This is a pullback, retrace. You see how it did that? It retraced. Do you think it's coincidence that it retraced exactly to this line that I drew through? This trend line area that I drew through, that it retraced perfectly there? And we're not getting into this right now, but if I drop the Fibonacci, it's right there at the 50%. So the 50% is meeting this trend line, and there's a market structure shift happening right there. Do we think that's like coincidental? Do you think that's coincidental or something? All right. So some people would do this. This is just understanding the markets. We're just getting intimate with how to read price. We're not exactly getting into strategy. Like I said, I'm freestyling right now. So let's say like boom, you see this happening. You want to just take it. Place your stop against that strong structure. And let's see. Let's go for a static 1 to 2. And let's just see, reading price, what happens. So it's trending up. We got a market structure shift. Boom. We got a pullback and makes a lower high, which confirms our idea. So let's move forward with price. Let's zoom in so you guys can see it. Zoom in so you guys can see it. Let me fix this. And let's just go forward one bar at a time. What happens? The market opens, boom, we're getting faked out. Look at that. I just want to see it. We're seeing how price moves. Just watch. Faked out. Price went and actually this is a good example because this is not how I trade, but this is a good example. And that's why you get faked out on plays like that. What did price go do? This is you know what? This is actually perfect. Look at that. Look at that. Price went up and it sought out both these liquidities, right? Boom. When it hit these liquidities, what do we see? We see it give this motion right here, give a displacement back down. Now let's go. That's a displacement back down. So we have a sweep. We have, I'll consider this a strong displacement on the 5-minute. We have this is not a true market structure shift, but it's a micro. Now let's step forward. Boom. We have this pullback here. You can always drop your fib and see what's going on. Boom. Pull back right to the 50%, 618. You would take, now this is how I actually trade. You would take a short position. Let's say you were late. Let's be late with it. Let's say it popped down like this. You would take a short position right here. I'm not even looking at proper trading times. So boom. So you took a short position right here. That's where that came from. I wouldn't want to see price go beyond there. So that's my invalidation zone. And let's not say this is how I am trading. We're going to seek the opposite in liquidity right there. And now we see how this plays out. Here's the thing. You never know if the market's going to go your way. Who knows? But let's see how this plays out. Yeah. And full TP. Full TP. This now I love how this was a great example of how some people would trade just structure. Some people would call this just a break. Like, see this trend? This trend's riding up right here. This is obvious what I'm about to say. People will call this a break and retest, and then they want continuation. That's not enough for me because why is that not enough for me? Because things like this happen. Things like this happen. And you thought you were in a good position off of market structure, but you're ignoring you're not ignoring liquidity. You're messing with liquidity at the wrong time in the wrong places. The move already happened. This liquidity was sought out from all the way over here. Hold on. Control Z. What the hell? From all the way back over here, right here, boom, that liquidity was sought out. Boom, that gave that move, and this is not the move of that. Now watch how I trade would have saved you in this situation. You feel me? Price took that liquidity, sought it out, boom. You get this move. You get mad people jumping in here, right? This is where they get all their money taken. They get shook out, all types of shit. This is actually the pullback right here. This is the pullback. So let me be real with it. Because if this happened, and then this happened, and then that's happening, I might go ahead and get in there. Pause. I might go ahead and get in that position. Let's get more in there so you guys can see what's going on. So you guys can see what's going on with the candlesticks. This went there. This pulls back, and it's giving this low, lower high, lower low. Boom. I'm like, fuck it. We have a sweep. We have a sweep in liquidity. We have a strong displacement right here. This is a strong displacement. I hope you guys can see my cursor. This is a strong displacement right here. We have a market structure, control flips. This is the flip in the control. Boom. boom, boom. So some will want to go here. And here's the beauty of this system for real. You have to negotiate it properly because, yeah, you can go here, but if you go here, what the hell are you doing? You're like seeking liquidity. Let's say you're seeking, let me make it visual for you so you guys will understand. Short position. So let's say you went here. You consider this the pullback. You went here. You set your stops. You set your stop right there. Let me be real. This is how it's invalid because people would set the yes. This is perfect how I'm explaining it. People would set their stops right there. They would aim for the lower liquidity, right? They think they're doing everything right, pullback, whatever. But no, this you get cooked. It never hits. It never hits your take profit. Let me be clear so people don't think that's over there. It never hits your take profit, and then you get cooked. It's a losing position. And now, and that's because you set your stop loss right there. Now let's do it again. So you got in right there, and you're going to use proper structure. Look how big that stop loss is. And where's the next liquidity to seek? This is the next liquidity to seek right here. So at best, for your first target, your real target, at best, you're not even doing 1-to-1. That is not acceptable for a trade. You feel me? So that's what invalidates that in my system. That's what invalidates that as a pullback in my system. So you would avoid that loss, right? Now, boom, boom, boom. This pulls up here to there. This still is not a valid pullback for my system. Still too much stop loss. Boom, boom. Displacement down again. You're like, oh, I can go there. No, you can't go there. Too much stop loss. Price continues to pull back. Now we're interested. Now we're interested. It goes boom, gives us a market structure shift. And now this is more appealing to go short. Now let's say I was being overzealous, and like you people often are, and I got in high, low, high, low. Yeah, let's say you did it right there, being overzealous, like boom, like that's where I'm supposed to be going. You place your stop here, right above that level, and we can seek out this liquidity here as this liquidity right here is take profit number one. And then we have this liquidity right here. And we'd be calling that take profit two. And look at that. We have this obvious liquidity right here. And we will call that, like we're talking about if you have a live account right now, you can't do this on a prop firm. Take profit three. But that's why you need to put your own money up so you can do shit like this. So, boom. This is to this liquidity to this structure. It's a 1 to 145. That's acceptable as a trade. This is the next one, which is over 1 to 2. Some people trade 1 to 2 static. Some people trade 1 to 1 static. Some people trade strictly logic, like from structure and to liquidity, like this. So this would be pure logic. This is also logic, but we can't count on that until we see what reaction happens here. You feel me? But some people have their convictions in these moves and they'll play it to where it needs to go. This, we're kind of like cheating because we can see what's happening here a bit. But look, this is more of a swing trade kind of what I'm showing right now. But look at this. Let's get this out of the way because I already showed how that messed up. Right? Look how that liquidity was taken right here. This is liquidity. Let me bring this out. Yeah. So yeah, this line right here is liquidity. You can see price took this liquidity, created liquidity up here. You feel me? Pull back, never got it. We got a clean trade. Now, look over here. Look over here. This is very interesting. So I'd say that, like, what more can you ask for? 1 to 2. You feel me? 1 to 3. Could it be achieved? Yes. As you can see, price came and got that liquidity too. It gave a pullback and came and took this liquidity. This is a close call, but with your stop loss placed properly like this, you're still in this trade if you want to be swinging and holding this position. You're getting your TP3. And I didn't know this was going to happen, like I'm saying. And we get, because I'm doing a playback on a random day, and we get a TP4. All right, let me reset chart view so it's going to look. So wait, did I just lose where I was at? Let's reset the chart view. No, the aspect ratio just threw me off. Hold up. Yeah. So from here, do I want to get into the overall structure thing right now? No. No. So yeah, strict in my rules. I need to pull back to a FVG to take that entry, which you get it or whatever. But right now we're just being kind of more strict on liquidity concepts. So you see how liquidity was taken again? And if you can see, when the liquidity is taken at certain times, boom, that's fuel for the move to go in the other direction. And you get all that. You feel me? Now, as you can see, let's kind of make this bigger right now, just so you all can read it if you want to read it. Let me make it like 20. I wait for the sequence. I get a, and this is, look, here's it right here. You feel me? I wait for this sequence. Liquidity sweep. Let me just number it. Like, yeah, let me get the brush out. We have number 1, the liquidity sweep. We have number 2, the displacement right there. We have number 3, the market structure shift, control flips, right? This is also the pullback. This is also the pullback. So we have 3, we have 4, we have 4 right there. Structure holds, boom, pushes down, it holds. Entry at an FVG or origin. So let's just be strict with it. It's 1, 2, 3, 4, 5 structure holds. And we have 6, an entry at an FVG origin. As you can see, boom, price pulled down a bit, pulled up. Let me get closer in there so you guys can see. Price went down, it pulled up. That's why you have to get in there on price like this. You got to get all the way in there on price. Pause. Boom. That displacement came down. It held. You see how it tested that FVG right here? That's another entrance. Like this, when this happens, that's an entrance. Boom, boom. Then we get the slip down. And then we target opposing liquidity. And what did we do? We targeted opposing liquidity. And what happened? You got all the liquidity. You get crazy moves like this. So there's money to be made all day, everywhere on the chart, and you be out of your mind all day. You feel me? Some people do it very well, but from my extensive research, this is what works for me. This is what's easy to see. I think if you know nothing, you can kind of understand what I said. If you know nothing, this is probably not the best video because, like I said, I'm freestyling. But hopefully you can just see with your own eyes what's going on and see how horrible I drew these numbers. 1 looks almost decent. 2 looks okay. 3 looks horrible. 4 looks like a Y or some type of rune from Nordic mythology or something. You feel me? The six might be alright. All right. So yeah. Anything else I want to cover? I think this is a I think this is a good one for a quick video to just get in the mode of making videos and talking. The next one I make, I'll have notes and I'm gonna have it structured more. How do I say it? It'll be more classically structured. Let's just put it that way. We'll have it more classically structured. All right. So yeah, until next time, Technical Players Club, discipline, logical, systematic. I must not fear. Fear is a mind killer. Fear is a little death that brings total obliteration. I will face my fear. Seek freedom and become captive of your desires. Seek discipline and find your liberty. Peace.